Hi and welcome to Westpac London's end of day for Monday the 8th of August. And another serious down day too, apart from a brief period this morning when reports started coming in that the European Central Bank had been buying the bonds of the Italian and Spanish governments off the banking system, when we saw financial stocks in particular benefit from that, the argument being of course that the banks were getting rid of the toxic bonds. Apart from that brief period of half an hour or so, it's been a serious downside all day. Very quickly, concerns about the US economy reasserted themselves, heightened by the potential impact that the ratings downgrade could have. Of course, it's only one agency that's downgraded the US so far. The others have said recently that they reaffirmed the AAA rating, provided progress is made on the debt reduction, budget deficit reduction front. But those concerns about the potential impact of the S&P move on top of what's already a very weak economic environment certainly have got investors worried. And it seems to be turning into a little bit of panic selling now with even good quality stocks and assets being sold. Some of the numbers today actually on the stock markets were pretty scary. I'll just run through some of the European ones for you to start with. The DAX in Germany down more than 5% today. It's officially in a bear market down, having fallen more than 20% from its recent peak. French aren't far behind, down 4.7%, and the FTSE in London down 3.4% today. The only data in Europe actually was a survey of investor sentiment. It was taken at the end of last week when, of course, investors were seeing stock markets absolutely tank. So it's no surprise that that series actually posted its biggest one-month fall, certainly for at least 10 years. Surpassing anything actually that it saw in any particular month around the time that, for example, Lehman Brothers went under. Just gives you a bit of a feel for how we are starting to see an element of fear creep into markets now. Moving across the Atlantic, firstly, before I move on, I should mention the ECB buying Spanish and Italian bonds saw those bond yields fall around 100 basis points or more, from around 6.2% at the end of last week. They're now trading around 5.1, 5.2%. We don't know yet how many bonds were bought or the value of those bonds that were bought, but certainly there would be an element of announcement effect driving those bond yields down. Eventually the ECB will publish some figures though, telling us how their holdings of those bonds have risen. Moving to the US, no economic data today. It was all about reaction to the S&P move, which of course happened after markets had closed on Friday. The futures market suggested that the market would be down around 2% on the open. As we speak now though, with the Dow still got a couple of hours to trade, it's only 6 p.m. London time here. The Dow's down 2.7%, the broader S&P measure down 3.5% today, and the Nasdaq's actually down 3.7%. These are pretty big losses. You don't often see days like this, particularly consecutive days like this, stretching over a period of 2 weeks. So it really is a continuation of this reassessment of just where the US economy is heading and where the global economy is heading, and a reassessment also of the risks that we're going to see the sovereign issue in Europe become a lot more serious rather than actually be resolved by the measures that have been put in place to date. In terms of other markets, commodity markets very bearish today. Of the 19 commodities I look at each day, only 2 were high. They were gold and silver. Gold up 3.6%, $1,711 an ounce. That's a new record, first time above $1,700 there. At the other end of the scale, oil down 3.8% today. It's at $83 and change a barrel. Copper prices down around 3.6% today too. So the safe haven gold doing well. The commodities actually involved in sort of doing stuff, making stuff that make the world go round, they were marked down quite sharply in price today. Aussie dollar a bit weaker too, not dramatically so though, given the increase in risk aversion today and the scale of the losses on the stock market. It's around 1.03 against the US dollar, just down around another 0.5 cent during the London session today. That of course compares to $1.10 though against the US dollar a week ago. The major event to watch for tomorrow will be the FOMC meeting in the US. We don't get Ben Bernanke doing a press conference at this meeting. He only does them every second meeting, but we will of course get a statement. And that statement will indicate, we hope, a weaker US economic outlook. It's pretty clear that the Fed has been over-optimistic about the performance of the US economy, and its hopes of a stronger second half of 2011 are now looking somewhat forlorn, certainly on Westpac's forecasts. We'd also hope to see, or expect to see, a bit of a tweak to the language about monetary policy. That is, the Fed currently says, or the most recent statement said, that they'll keep rates at exceptionally low levels for an extended period. We'd like to see that language made more forceful, to give some hint that perhaps the Fed is a little bit closer towards eventually thinking about the possibility of maybe putting some more stimulus in place, probably in the form of the only option they have, which is further quantitative easing. More on that, of course, tomorrow when I talk to you. It'll be a later than usual video cast tomorrow. We'll do it after the FOMC meeting, so it'll be about 7:30 London time. Okay, thanks for watching. Speak to you tomorrow.